The big question on everyone's mind is when will home sales turn around? Are we on the cusp of a double dip housing recession, or are there signals that 2024 might see a recovery in the housing market? So, when we talk about housing recession, I make a distinction between transaction volume, the number of home sales, which the industry cares about, and home prices, the value of the homes, which consumers care about. They're not driven by the same factor. And this year has been a housing recession. We are on pace for fewer than 4 million home sales in 2023. But at the same time, we had a soft landing for home prices. Home prices eased back off the very peak of the pandemic frenzy. But even though we've had very few home sales, home prices are not falling. In fact, home prices are up a fraction this year, and the early data for 2024 says the same pattern is imminent. I've done recent videos on why home prices are up, but today let's focus on the transaction volume. So, if home prices are up, but home sales volumes are super low, will home sales volumes turn around in 2024? Or does unaffordability mean that we are in for a continued decline in the number of people buying homes? I will share some of the signals today. Stay tuned for what we know about inventory, new sellers, buyer demand, and mortgage rates. So at Altos Research, we track every home for sale in the country every week. We track all the pricing, all the supply and demand, all the changes in that data, so you can understand it immediately as it happens. We make all that data available to you far before you see it in the traditional channels. I'm Mike Simonsen. I'm the founder of Altos. It's now November, so let's take a look at the latest U.S. housing market data. Available inventory grew again this week, inching up 0.7%, 70 basis points, to 567,000 single-family homes available, unsold, on the market. That's just a tiny fraction fewer than last year at this time. Last year, inventory peaked during that last week of October. This year, we have at least 1 week in November so far with inventory climbing. I suspect, though, this is it. Thanksgiving is right around the corner. The dark red line here is this year's curve. It is just below last year and starting to peak and decline for the year. I expect inventory to be flat or start moving lower by the next week's November 13th market report. By the way, next week, Thursday, November 16th, we will have our hour-long webinar where we look at all the details that we know for 2024. We'll explore what we can already see in the data and what the local markets are telling us. Register now for that webinar on November 16th. There's a link in the description below. Click that, join us. These are limited to 1,000 attendees, and we get way more than that each month who want to join. So you can still reserve your spot now, though, so do so there. The key to remember about available inventory as we roll into the new year: if rates go up from here, inventory will build next year. If rates go down, inventory will shrink. If you are a potential home buyer, or you have potential home buyers on the sidelines waiting for affordability, hoping for lower rates, maybe you'll get lucky and that'll happen. But also, if rates drop, buyer competition will increase and the selection of homes to buy will fall. So back to our question about the home sales volumes, lower rates will increase the number of deals that get done, even as the market remains constrained by too few sellers. So more sales happening, but fewer homes on the market. This week, there are just 62,000 new listings, of which 9,000 of those got offers and went into contract immediately. So while there's no rush of new sellers coming to market, of course, it's November, it is notable that the new listings volume is now basically the same quantity each week as it was last year. Same levels as last year. We've had fewer sellers all year long. And because last year at this time, that stock of sellers was shrinking really quickly. We're now on pace, though, to start 2024 with roughly the same seller volume as we started this year. So this says to me that the mortgage rate shock is moving past the market. And next quarter, we will no longer see shrinking sales volumes. In this chart, each bar is the total number of new listings each week. The taller the bar, the more sellers. The light portion of the bar are those new listings that went into contract immediately. So I included this horizontal annotation line to show this week's level compared over time. And I marked last year so you can see that vertically. Last year, the inventory was plummeting each week. The new seller volume was just dropping. And see how steep, you can see how steep that decline is each week there. This year, the seasonal decline is much less dramatic. And see how the slope stays shallow there at the right end of the chart? So if we assume this slope stays the same, this means that we'll have fewer new sellers to start. We'll have a few more new sellers to start the year, right? Because we're coming out less of a hole than we were built last year. It will mean a little more supply, and which will allow a few more sales to start the year. That indicates a sales volume uptick a little bit. Now, I should point out that these signals are very early, and we have months of headlines from NAR, pending sales, the MBA purchase index. They're still going to show decline for weeks and months more. It is, though, in these moments in history that the data is most fun. You get to start reading maybe bullish transitions in the data while the headlines are still reporting Armageddon. So it's kind of scary to take that position. I like to be cautious. I don't like to be overly rosy in my analysis, but just keep your eye on this supply chart to see if the latest trends continue. And maybe in January, we can start to be confidently more bullish. Maybe mortgage rates, though, spike back over 8%, and then the analysis reverses. So as of right now, slightly more supply means slightly more transactions for 2024. That's the supply side. So let's look at the demand side. While you can't really rely on sales volume to be like definitive about housing demand, right? Sales are capped by supply. The signs here, though, are maybe indicative of a bottom here. I think we're going to have slightly more sales in 2024 than 2023. And I say this because we can see the sales rate is finally not shrinking anymore. We saw 51,000 new contracts pending this week for single-family homes across the country. It's November, and so there aren't a lot of sales, of course, but for several weeks in a row, the sales rate each week has been roughly the same as last year. We started 2023 with 30% fewer sales happening each week. The dark line here shows the number of home purchases, the contracts started, the new pendings each week, the contracts started each week. And the bright red line is last year. So see how all year long, the dark red line is fewer sales than last year. Then suddenly at the far right end of the chart, now they've converged. I thought that back in July, maybe the sales rate might eclipse last year. See in the middle of the chart there. But then mortgage rates spiked and sales dipped again. So now we're finally running each week with not fewer sales than last year. This indicates the end of the declining home pattern for home sales to me. It also tells us that any recovery we might see here is very fragile. We've had a few days of falling mortgage rates, but rates could very easily bump back into the 8s or higher with a few hard macroeconomic variables, and then the transaction rate would fall again. So it's a fragile transition that we're in right now. When analyzing home buyer demand, I often prefer price reductions as a more useful metric than just the sales volume. Price reductions are just about to top out for the year. Currently, 39.1% of the homes on the market have had price cuts from their original list price. That's up 20 basis points from last week. It's pretty high. A lot of sellers this fall got trapped by the surge of mortgage rates over 8%, but price reductions are still notably fewer than last year at this time. Therefore, I don't think the signs are strong enough to indicate that home prices would be falling in 2024. You can see the curve from this year is just about to top out. That's the dark red line here, probably next week, and then start to decline over the holidays. Price reductions as a percentage of homes on the market decline over the holidays because a lot of those listings that were sitting there without offers, they get withdrawn to get relisted in the spring. The shaded area, the shaded gray area here is the normal zone. And at the beginning of the year, at the left side of the chart, the price reductions were started very high, and then we could see them declining very quickly as a clear indication of renewed levels of homebuyer demand this spring, which was a surprise at the time. We could see very early in the year, though, that would create a floor on home price declines after last fall. That's a very hard message for people to hear, especially if they'd been expecting big home price declines in 2023, but that's what the data told us. So the thing to be watching here now with price cuts is how home buyers react to changes in mortgage rates from here. Buyers are more sensitive to changes in rates than to the absolute level. So if mortgage rates stay in the 7s, it's actually slightly bullish for the transaction volumes in early 2024. If rates fall, that's obviously more bullish. We can see the reactions to rate movements very quickly in the price reductions data. Both this year and last year had an inflection point in September with late season big spikes in mortgage rates. And price reductions were correlated almost to the day with those rate jumps. Fewer offers get made, and so more sellers cut their prices. At the start of the video, I mentioned that while sales volumes are low this year, home prices are up. And the median price of single-family homes in the U.S. this week is $430,000. The home prices continue to be up by just a couple percent over 2022 and look to roll into 2024 with that same level. The median price of the newly listed homes is just a hair under $386,000 now. This measure is a couple percent higher. The light red line here is a couple percent higher than last year. You can see the two big dips coming for each of the holiday weeks in November and December. The price of the new listings will be fun to watch, but the absolute level gets there over January, over New Year's, and then where is it relative to last year? And then how quickly does it pop up again in January? So those first few weeks of pricing in January give us a lot of signals for home prices for the whole year 2024. And in last January, we could see a pretty quick starting to recover after a disastrous fourth quarter of 2023. There is so much signal in the active market, and these market conditions now change so quickly in the post-pandemic world, very sensitive to interest rates. It's really early, but you can see some signs that home sales volume is no longer shrinking and may be poised to grow in 2024. These are the most fun and scary moments to be paying attention to the real-time data. It's fun to make the call, but it is scary to go out on a limb and potentially be wrong. I can always be wrong. If you need to help homebuyers and sellers understand this change first, you should join us at Altos. People need help understanding what's the fast-changing market, what's happening, and they need to hear it from you. Go to altosresearch.com, book a free consult with our team. We will help you know how to talk about the market with your clients and prospects today. There's a link in the description below to join us. Click that and just get started now. It's time to prep for Q1. Also, don't forget next week's webinar. We'll spend an hour with all the leading indicators for 2024, the 2024 housing market, all the local markets too. These webinars are limited to 1,000 attendees, and this one's filling up fast. So click the description below, the link in the description below for the webinar, and reserve your spot now. You can still reserve your spot. Okay, more next week.